Citibank earlier in trade finance. Then I was in DBS, Development Bank of Singapore. I was holding treasury and trade finance. Treasury some back part. Okay, so treasury part and trade finance. Then prior to that, I was in HDFC Bank. There I was in your retail banking plus this third party products, all those. Before that, I was in a cooperative bank, Cosmos Bank. There I was holding the corporate loans. Okay, so I've worked in all the sections of the bank, starting from retail, corporate, third party, then treasury and trade finance. So all of them I've worked in. So that's why I remember whatever is there in your BFM, that was my daily working. So I know these things in and out. Okay. So that's why you are in the safe hands, always remember. Because the work experience from the foreign banks is totally different. There it's really very tough job to be there as such, because there is no lethargy allowed in those banks. Okay. So coming back, here we are, and we'll start with the orientation class today. See here, orientation means what? Here I won't start the topic immediately. I'll give you the rough idea of what the topic is. Okay. Firstly, you need to know what is your CAIIB syllabus totally. Totally, you are having four papers compulsory and one is elective. Out of those four papers, ABM, BFM, ABFM and BRBL. Okay. So I'll be holding mainly the classes for BFM and some part of ABM. BFM and some part of ABM. ABM module A and module C. These are all numerical based. A and C is completely numerical. So I'll be holding that in ABM. And in BFM, BFM is completely numerical. A, B, C and D, all of them. International banking, risk management, treasury management, balance sheet management. Everyone has numericals over here. So I'll be holding both of them. ABFM by a separate mentor, BRBL by a separate mentor. Okay. So remember, ABM, BFM, these two are numerical based, completely numerical based topics. Okay. These are the compulsory subjects. Now what about the electives? Electives are these: rural, HR, IT, central banking and risk. So whenever you want to select any elective, select that elective in which you are conversant with. Conversant means in which you know the topic very well. At least you can pass, not pass, you must get at least 30 marks even if you don't study. That much confidence should you have in the electives. I always suggest the guys to select the elective of rural or HR. Okay. I myself take central banking elective. I myself do teach central banking elective, but I rarely suggest to the guys, because what happens is central banking is completely related to RBI. Rural and HR is such that almost 40% of your problems or your portion is you have done it in your daily working only. Okay. HR also almost 30 to 40% of your HR is there in ABM. See this ABM you are having again HR over here. So this same HR is 30 to 40% there. This HR and this HR almost 40% coincidence. So what happens in this case? You get 40% of your portion you already know over here. So that's why I generally suggest the guys to select rural or HR, IT, central banking and risk. If you are through in IT, means you have been an engineer in IT, then you go for it. Central banking, if you have worked in somewhere related to RBI, then take it. If you have worked in treasury, take the risk management. Otherwise, these two are the safest ones. Now, there is no negative marking as of now in your CAIIB. Plus subjective questions. What are subjective questions? Subjective questions means there will be questions without options. There will be questions without options. So they won't give you any option over here. Just it'll be a numerical based or some theory where single answer is to be given, and you'll have to write your own answer. Okay. Then how much time is required for CIB preparation? Remember, if you have 5 months, then minimum 1 hour daily. If you have 5 months, remember minimum 1 hour daily is required. So never lose it. If you feel that there is ample time, so remember there is no ample time. Why? Because now after January, immediately comes this your year-end targets, and immediately comes the year-end. So things are not that simple. After April, generally we all have smaller children. So all of the children will ask you for vacation. So there you'll have to go again. So then the problem multiplies. So that's why even though it seems that you have 5 months, remember 5 months are not enough for a year. So minimum 1 hour daily is required to be studied. Now 1 hour means what? I'm not saying 1 hour means classes 1 hour. You'll see classes are there for 1 hour. Classes 1 hour plus additional at least half an hour. I say 1 hour, so you can at least study half an hour. So even half an hour if you study, that much is also enough. But on a daily basis. Whatever homework is given, do it. Whatever numericals are solved in the class, practice them again. Whatever classes are taken over here, practice them again. Okay? So how much time is required? If you have 5 months, minimum 1 hour daily. How much time is wasted during the banking job? Much of the time. I'll tell you how. We generally waste our time in unwanted WhatsApp groups and messages. This is a general habit. WhatsApp has created a lot of problems to us, right? Unnecessarily we watch all the WhatsApp messages. Overwhelming emails. Too many emails come to us in our bank also. And many of us have the habit of checking all the emails. Don't check all the emails. Whatever is related to you, only check that. Instant messaging notification. This is also a worst problem in our mobiles. Instant messaging. This sale, that sale, that sale. Immediately we go for the sale. So, unnecessary friend chats and tea breaks. See this. Friend chats and tea breaks are a problem in every banking industry. You see, many times we go for tea breaks. Many times we go for chatting. Lunch hour is, we waste much of the time in the lunch hour also. In some banks, I'm not saying all. Some banks are watertight over here. Okay, it's like that airtight container in some branches. You don't have even 15 minutes for the lunch. But wherever I would suggest, wherever you can rob the time, you should. Because unnecessary time wasting is not acceptable at the CIB level. Okay. Online shopping. This is also one worst kind of habit which we have. Okay. Don't go for online. See here, online shopping is okay, but not unnecessary online shopping. Okay. Is guidance from the professional required? Yes, obviously. Those who are watching on YouTube also, this is a free class on YouTube. So those who are watching on YouTube also, kindly note, you will need a guidance from the professional. Why? Because the problem over here is the books of your CIB are around 600 pages per book, roughly 600 pages here and there. So if you consider 5 subjects, 600 into 5, 3000 pages you have to study in 4-5 months. So that's why you won't be able to study everything. So you have to note what is important, what is not important. And that is told in the classes. So that's why guidance from the professional is required. But problem is the professional should be trustworthy. Nowadays what happens, everyone and anyone comes on the YouTube. Those who have not been in the banking, they also come and teach you many of the times. So that is not worthy. Okay. Professional should be trustworthy, proven track record. If you check, each of the mentors in this Adda 24/7 are having almost 40 plus batches experience. We have seen almost 3 portion changes up till now since 2014. I myself have seen 3 portion changes. Friendly and empathetic means the mentor must understand your problems. What do you mean by understanding the problems? Understanding means many a times in the banks we have the pressures. So how do we think? How does the student think? The mentor must understand. After coming from the job, by traveling for almost half an hour or 1 hour, working in the bank for almost 6, 7, 8 hours, and then what will be the mentality? That should be the way of thinking of the mentor also. Okay, everyone, those who are watching on YouTube, kindly download Adda 24/7 app on your mobile. In this app, you will be getting the premium study material plus live classes, ebooks, tests, everything. So download it right now. How can I rob the time within my job schedule? How can I rob the time means what? See here, importantly remember, nobody in this life, nobody in this world will ever get a time for doing anything. Everyone is busy. Even the person who is free is also busy. Because nobody gets a time. So what we have to do, we have to rob the time. How do you rob the time? I told you you study at least 1 hour. But how do you study 1 hour? Read GRs available on the bank employee portal. Every bank of yours is having an employee portal now. If you are not having it, then also go to Google. In the Google, there are various RBI circulars available. Search through those RBI circulars. Follow IIBF Vision. IIBF Vision means this is a free letter you get whenever you join this IIBF, right? Whenever you become the member. So it's there in your email. All of us get this IIBF Vision. But we rarely read this, okay? Are all of you getting this IIBF Vision? Those who are in the class right now, tell me. Are you getting the emails of IIBF Vision from IIBF? Everyone? Okay. Are all of you getting it? IIBF Vision. Have you got it? Everyone? Some email in the email ID you get it. We don't even open that. So don't do that. IIBF Vision should be read sincerely by everyone because it gives you the latest changes in the banking industry. Very important ones. Okay. Second one, when your boss instructs you to do something, learn the technical part about it. Whenever you are given a new job, don't just repel that job. Try to think about the technical part of that. Okay. Study early in the morning. As much as possible, study early in the morning because in the early morning, our mind is fresh. We can study a lot. Our mind grasping power is more. Study in the weekend with full efforts and dedication and utilize the weekends. As much as possible, utilize the weekends. Never ever leave the weekends. Okay? At least for these up to June. If your job is far away from home, study while traveling. You can study while traveling, okay? Because these are important parts which you must always focus. Here, we have to rob the time. Robbing the time is not that simple. Wherever you can, now you would know the better picture about yourself. Wherever you can rob the time, try to rob the time. This 1 hour study doesn't mean 1 hour in a continuous stretch. Read 10 minutes while traveling. Read 10 minutes in the bank. Read 10 minutes somewhere else. Wherever possible, read it. Read or watch the videos. Anything. Reading. Nowadays, everything is available on the YouTube also. Many of the YouTube channels are there. Watch the videos. Adda 24/7. Now, as you guys have joined the classes, you'll get this recorded sessions. You'll get the ebooks. You'll get the tests. Those who are watching on YouTube, kindly note, you'll be getting the test, YouTube, ebooks, and recorded sessions also. So whenever you can't, suppose if there's some problem in the bank, if you can't study, then you can watch the recorded sessions also. Okay? Now we'll come to our topic, BFM. BFM syllabus is essential for the aspirants who are preparing for the upcoming CAIIB exam 24 now. Okay? So this is the essential syllabus. It was prepared in 23. Now it is for 24. So it is the same syllabus which has been kept in 23. Okay. So it stands as the backbone of the bank financial management paper, right? So remember, BFM is actually this BFM is the actual backbone of your CAIIB. Actually, BFM is a backbone because BFM is considered as the toughest subject in your CIB. Toughest. Okay. Why toughest? Because it's almost 50-50 numerical. 50 numerical and 50 this theory based. So that's why it's considered as the toughest one. Okay. Some changes have been introduced in May 23 and those same changes have been carried out. Same changes means what? Subjective questions have been included. Earlier there were no subjective questions. Now you won't be having the answers for certain questions. Okay. So candidates need to plan their own strategy, okay, for clearing the CIB 24, okay. So you'll have to plan your strategy means what? We at Adda 24/7 will help you via live classes, ebooks, tests, etc. So we'll be helping you guys over here. So that's why I would suggest today's orientation class. Tomorrow we'll be starting with the actual class. First topic will be starting tomorrow. Okay. So that's why join this class immediately. Now let's come to the BFM subject as such. BFM subject has been divided into 4 modules. What are those 4 modules? Remember, international banking, risk management, treasury management, and balance sheet management. Now one important point over here which you need to note. Let me come to the module one by one. I'll give you in details. Obviously, I've given all these, all the slides are there for what are the subjects, specific subjects in each module. But to come up with the specific topic, remember this, international banking is totally related to Forex, foreign exchange. This includes numericals on Forex. This includes various roles of various agencies on Forex. Like ECGC, RBI, FEDI, all these are included over here. Then what is the latest development? GIFT City, IFSC, these are also included over here. Then comes risk management. Risk management is totally related to, this is the main subject module of your BFM. If anyone understands module B, module C and D are the easiest ones for that guy. If somebody understands module B correctly, C and D are the easiest ones for that guy. Okay. So that's why you focus very much on module B. Because C is dependent on B, D is dependent on B. Okay. So what is there in risk management? It includes various risk parameters, Basel norms, CRAR ratios, various numericals, what are the various risks to the banks, all those risks are included. So various risk and various funding risk, various financial risk, various reputational risk, systemic risk, all these are included over here. Then module C is related to treasury, completely treasury. How does the treasury work? What are the risks in the treasury? What are the products of the treasury? Then balance sheet management. Balance sheet management means it's related to the balance sheet of the banks. Remember, this is of the banks. This is not for the customers. How does a bank manage the balance sheet? Various topics are there. Here, module C and D are mainly theory based. C and D are mainly theory. A and B are mainly numerical based. But then also, in C and D also they give some numericals. There are very less numericals over here. A and B has many numericals, many heavy numericals. Okay. Everyone subscribe to Officers Adda 24/7 YouTube channel. In this channel, you will be getting the latest YouTube YT series on all the subjects, BFM, ABM, ABFM, BRBL, and that is free. Check the timings, okay? And latest updates are updated on this Officers Adda YouTube channel. So that's why subscribe to it, click on the bell icon immediately. Now let's come to the detailed module. Module A. Module A is international banking. Now what are the subjects in this? There are total around 10 to 11 subjects. Look at this, 10 topics over here. So what are the topics? Exchange rate and forex business, topic number 1. This includes numericals. Numericals mean those who have studied in JIB. Those numericals are also there, plus the latest ones. These are as tough as the JIB, means more tougher than the JIB ones. So exchange rate means these are the forex numericals that you'll have to study the basics again of the forex. The basics mean all the basics like this, what is this TOM, what is this spot, what is known as this premium, what is the discount in Forex, what is the chain rule, everything will be there again, but at a higher level. Then you have LRS, Liberalized Remittance Scheme. The scheme which is introduced by RBI for the transfer of, under LRS, how much amount can be transferred? You have done this in JIB. Tell me everyone. Those who are watching on YouTube also, kindly type in the comment section. Under LRS, how much amount can be transferred? Okay, outside. Suppose if I am an Indian citizen, how much amount can I transfer? Yes, very right. Vinayak, very good. Okay, 25,000. No, 2,50,000. Okay, means 2.5 lakhs. 10 is less. So 2,50,000. So you will get this LRS again in details. Okay, LRS scheme and other remittance facilities for residents. Correct. Then correspondent banking and NRI accounts. Now these are correspondent banking means here you will again get Nostro account, Vostro account, various NRI accounts. NRI accounts means NRO, NRE, FCNR, RFC. These are the various types of accounts. NRO, NRE, you know, many of you know, might because you have done your JIB. But then also you might have forgot. Many of you have done the JIB many years back, right? If you have done it recently, then you'll remember it. But if you have done it many years back, then it is again refreshment. So NRI accounts, even RFC account. RFC accounts we generally don't study in your JIB level. But RFC accounts are also there. So NRI accounts, where NRIs are allowed to invest, in which fields NRIs are not allowed to invest. These all topics are there. Right? Do you know NRIs are not allowed to invest in agriculture? They are not allowed. NRI can buy a flat for his own living, but NRI can't do the business in flats. NRI can invest in mutual funds. NRI can invest in stocks also. But flats it's not allowed. Plantation not allowed. Agriculture not allowed. Then you have next topic of documentary credit. Here documentary credit LC means what? Documentary LC. Here it means that all the banks you will be having. Advising bank. You have done this in your JIB. Those who have done in the earlier portion JIB. There you had it. This LC. Advising bank, negotiating bank, then this confirming bank, nominated bank, reimbursing bank. All these things will be there. What are the important documents in LC? What are the important documents? Tell me. Who knows the important document? There are 6 documents in LC which are very important. I'll give you a simple rule. 2I, 2B, PC. This is what I give you generally. 2I, 2B, PC. What is 2I? Invoice insurance. 2B, bill of lading, bill of exchange. PC, packing list and certificate of origin. These are the basic documents required in any LC. So, documentary LC, yeah, 2I, 2B, PC, correct. So, these documentary LCs are the basics, means you will study from the basics and you will go to the higher level. What are the various types of LCs? There are various types of LCs like transferable LC, red cloth LC, back-to-back LC, all these things you are having. Then facilities to exporters and importers. Government has given various facilities. All those are studied over here. What are the various facilities to? Mainly the facilities are for the exporters. Importers very few. Because why importers few? Because logic. In import we give out the money. And in export we get the money. So that's why exporters will definitely have higher facilities. Importer will have the facility only if that importer is going to resell it later. Right? If somebody is going to resell it later, then it's okay. If somebody is only going to import, then no facility. Government won't give any facility for that guy. Then next is ECB. This is all module A. ECB, External Commercial Borrowing and Foreign Investments in India. What is ECB? That is taken over here. External Commercial Borrowing. Then there are various trade credits. Once ECB comes, immediately trade credit comes. Buyer's credit, supplier's credit. That is also a part of this only. Then risk in foreign trade. Role of ECGC What is the role of ECGC? What is ECGC? ECGC means Export Credit Guarantee Corporation. Export Credit Guarantee Corporation, right? So ECGC. So the role of ECGC. How does it protect the exporters? How does it protect the banks? ECGC's role is always focused on the bank as well as the individual customers. It has various policies for the bank as well as it has the policies for the customers. So all those policies are studied. Role of Exim Bank, Reserve Bank of India, Exchange Control in India, FEMA, FEDI and others. What is the role of Exim Bank? What is RBI doing? How does RBI control the forex? That is also studied over here. What are the exchange controls? What is FEMA? What is the importance of FEMA? What are the various sections of FEMA? FEDI, what does FEDI do? Foreign Exchange Dealers Association of India. Foreign Exchange Dealers Association of India. So what is the role of FEDI? Do you know what is the role of FEDI? Who gives the rates, forex rates which you get on a daily basis? These forex rates which you get, who gives you the rates? In your branch you might be having, many of the branches might be having that all display. $1 equals to this much today. We change it on a daily basis. Who gives you the rates? Dollar rates? Yes, ID. Who gives ID this rates? It is given by FEDI. FEDI daily. FEDI gives you the rates on a daily basis. So that is one of the role of FEDI. Then you have IFSC. IFSC means International Financial Service Center. What is IFSC? IFSC is similar to that of the SEZ model. What is the SEZ model? Here it means although the region is in India, but then also the rules of Indian RBI, means Reserve Bank of India, are not applicable on them. These are like the international centers who operate like as if they are not in India. These are IFSC. SEZ model. What is GIFT City? Okay, Gujarat. It's a inter financial tech city. Okay, it's a fintech tech city. Gujarat International Fintech Tech City. That is the full form. So this GIFT City. What are the advantages of GIFT City? Then technology. This is a theory part. Technology is very easy. Technology is not that difficult. Okay, it's a theory part. Then comes module B, the most difficult module in BFM. Risk and basic risk management framework. Risk in banking business. Risk regulations in banking industry. Market risk, credit risk. Now what are all these? It gives you the framework. What all are the committees? Many of you might have heard of the ALCO committee in your bank. ALCO. Have you heard this ALCO committee in your bank? ALCO. Many of us say that ALCO. Asset Liability Committee, right? So what is the role of this ALCO? What does this ALCO do? Is there any other committee other than ALCO? Yes. What does ALCO do? ALCO only checks the market risk. Okay, only market risk. But other committees like CRMC, Credit Risk Management, and ORMC, Operations Risk Management Committee. There are 3 committees: ALCO, CRMC, and ORMC. All these will be studied by you in this 11th chapter. Risk in the banking business. Risk in what are the various risks? Means it relates to country risk, forex risk, sovereign risk. Then various Herstat risk. Various risks. All the risks will be studied by you. Risk regulations in the banking industry. Once you know the risk, what are the regulations? Regulations means how do you control those risks? What are the measures taken by the bank to control those risks? So this is risk regulations. What does RBI say about this risk regulation? What are the measures given by RBI? So these are all studied in risk regulation. Then you come to specifics like market risk, credit risk, and ops risk. Ops risk will be over here. Ops risk is operational risk. So market risk, credit risk and ops risk. What is market risk? Market risk means whatever is not in your hands. Keep it very simple. Whatever is not in your hands, that is market risk. Means if there is a, let's say, Russia-Ukraine war, or now what is the latest war? That Hamas and Israel war, right? Israel-Hamas war. So that is a market risk. Similarly, what that Maldives is facing, Maldives, right? Maldives is having the market risk now. Was it needed by any of those three ministers to say anything? Because of that, the whole economy is gone. So this is the market risk. Market risk means which is not in your hands. Credit risk means suppose if I give a loan to you, and if you don't repay it back, then that is a credit risk to me, because it becomes an NPA for me. So that is a credit risk. Market risk means always which is not in your hands. Credit risk means always if I give you a loan of any sort. Now understand this. Credit risk does not only relate to loan. It also relates to bonds. Means what? Buying the bond. Suppose if you give me let's say I'll give you a simple example. Suppose if any cooperative bank, smaller cooperative bank, okay, I buy the FD of that bank. Buy the FD means get the FD. I invest money in that bank and get that FD. If that bank tomorrow collapses, defaults, then that FD, will I get that money back? Yes, I will. Because of that insurance, I'll get it back, DICGC. But if there was no insurance, then it was zero amount for me. And many of the bank customers have lost their money earlier because of this, not eligible for the DICGC. Okay, so in that case, what happens? Whenever any bank, risk means, suppose if anyone buys any FD from any bank, and if that bank defaults, then that customer is at risk. Similarly, banks also. Suppose if any bank gives a loan or buys a bond from some other company. For example, I'll give you a simple example. In 2018, there was a problem in Yes Bank. Anyone remembers? Yes Bank. Similarly, in PNB also at that time. But PNB didn't face the problem. Because why? Because it's a government bank. It immediately was handled by the government. But Yes Bank was a private bank. They faced the problem. So SBI had to invest. Because SBI had purchased the bonds of some companies which became default. So that is a part of credit risk. Credit risk means whenever I give you the money in any form and I don't get it back. So that is a credit risk. Ops risk. What is operations risk? Operations risk means, sure, once I say operation, immediately it comes to your mind that employee risk. Employee making the error. See this. Operation and risk is not only related to employee, it is related to other things also. Suppose if there is flood in your area, complete, your branches are under flood. Tamil Nadu, we saw it recently, Tamil Nadu. So if it is completely flooded, then what happens? Is it an employee fault? No. So that is also operations risk. If your system fails, link not there, is it an employee fault? No. So operations risk means by any ways, if I am not able to service to the customer, give the service to the customer. Many times it happens in your bank. You also might be facing. Have you ever faced? Answer my simple specific question. Those who are watching on YouTube also. Answer my specific question. Have you ever faced this no link problem? No link. Link not there. How many of you have faced? Those who are in the class, tell me. Those who are on the YT, you also tell me, YouTube. Do you face this problem on a regular basis? Link nahi hai, customer. Link hi nahi hai. Right? Link not there. This problem we generally face. Link not there. In many banks. I am not saying all. But many banks. Sometimes in a year it's okay. But every time, then there is a serious issue. Isn't it? Link not there. So this is the operational risk. How to control those operational risks? What are the steps to be taken? What is integrated risk management? Integrated means what? All the three risks are combined. Credit, market and ops. All of them are combined. Plus other risks are added. What are the other risks? Like systemic risk. Systemic risk is added. Okay, integrated risk management. Then liquidity risk management. Liquidity risk management means this is a temporary phase. Always remember, in every bank or in every company, every individual also, you and me also, at the month end, after the salary is gone, we always face this liquidity risks, right? So every bank also faces the same problem, liquidity risk. Liquidity risk is not a serious risk, but it may become serious if it is not looked into at proper time. Basel III frameworks. What are the Basel III frameworks? The three pillars of Basel III. What are the three pillars? You might have studied this in JIB also. What are the three pillars of Basel III? Tell me. Minimum capital. First one, pillar one, minimum capital. Second one. Who can tell me? In the comment section. YouTube also. Those who are watching on YouTube, kindly tell me what are the three pillars of Basel III. Yep. What are the three pillars? Minimum capital, correct. Second one, SREP, right? SREP. And third one is that balance sheet management, transparency, corporate governance. Okay. So these are the three pillars. So Basel III framework, again you have on liquidity standards, because Basel III mainly looks at liquidity. Understand why Basel III came in. Basel III came after 2008. In 2008, there was a major financial crisis. Which company had become bankrupt? Who can tell me? Which company became bankrupt in 2008? One big company became bankrupt in 2008. World company, international company. Which company became bankrupt in 2008? Who can tell me? Yeah? There was one company, big bank you can call it, bank also. It was one of the top 5 banks in the world. Lehman, correct. Lehman Brothers. Lehman Brothers became bankrupt in 2008. It was one of the biggest companies in the world. Okay. Similarly, in 2021 also, 21, this latest, there was another company which was going bankrupt. Again, bigger one. That company was Credit Suisse. Credit Suisse company. That company was becoming bankrupt. In fact, it had become bankrupt. So what happened to that? That other company purchased it, UBS. That's why it was saved. So liquidity standards are very important. Mainly, and there was one more bank in USA in 2022. What was that called as? SCB. Right? SVB, Silicon Valley Bank. Right? That bank also became bankrupt. So Basel III frameworks on liquidity. These are all related to liquidity. Because of liquidity, the whole companies become bankrupt. If not looked into at a proper way, proper time. Okay. Then comes Module C. Module C is smaller. Treasury Management. Introduction to Treasury, Treasury products, international equity and debt products, funding and regulatory aspects, Treasury risk management, derivative products, and Treasury and asset liability management. Now, what do you mean by all these things? Introduction to Treasury means it will include all the things like what is Treasury, what is the job of the Treasury, what is integrated Treasury. So, integrated Treasury is a new concept now in the international banks. So, what is integrated Treasury? What are the roles? What are the various products? What do you mean by Treasury products? Treasury doesn't sell anything. So, what does Treasury do? Treasury products mean these are all the derivative products. Derivative products sold by the Treasury to the customers. Also to manage their own risk. See, risk is to be managed everywhere. So that is called as hedging. For hedging, Treasury does this, takes these Treasury products. International equity and debt products. So these are all the international equity and debt means debt product means what? These are debentures, international debentures. International equity. Equity means how can I issue the equity to international customers? So these debt products are the main part because these are called as convertible debentures. So those are to be studied. Funding and regulatory aspects. So how do you manage the funding of the treasury? Funding means where does the treasury get the money from? Treasury will get the money from the banking operations. All your retail banking, all your corporate banking, the deposits in that will be taken by the treasury. And then they invest it in the bonds. Okay. So funding and regulatory aspects. Then treasury risk management. Now this treasury risk management is related to the above topic. Funding and regulatory. Because risk is managed in funding only. If you don't have funds, then you'll always face the problem. Even for the liquidity, short-term purpose as well as long-term. Remember, treasury has to focus on two areas always. One is in the short term, second is in the long term. Okay. So derivative products. What are the various derivative products? Already here, 24th chapter is a 40% repetition of 20th chapter. 20 and 24. They are somewhere related to each other. Okay. Then this 25th, Treasury and ALM, Asset Liability Management. Asset Liability Management is taken care of by ALCO department. So this ALCO department has one member from the Treasury. So this will be again studied by you in this Treasury Management. Then you have Module D. Module D is Balance Sheet Management. In balance sheet management, you will have the components of assets and liabilities of the bank's balance sheet and their management. So bank's balance sheet. What are the assets of bank? Tell me. What are the assets of bank? Bank has assets. What are the assets of bank? Who can tell me? In the comment section. Those who are watching on YT, type in the comment section. What are the assets of bank? Loans, correct? Loans are the assets of banks. And what are the liabilities of bank? Deposits. Right? Loans are the assets of bank and deposits are the liabilities of bank. So what are the components of those? Those are studied. Bank also has fixed assets. Many of the banks like SBI. SBI is having huge land bank. Huge. If you check SBI's land bank, it is one of the highest in the banking industry. Huge land at the main points. So these are again the assets of the bank. Similarly, other banks also have it. It's not that only SBI, but SBI is a noteworthy bank, named bank. Okay. So, components of assets and liabilities. Those components are to be studied. Now remember, asset doesn't mean only loan. Doesn't mean only fixed asset. Suppose if I purchase some bond, that is also an asset. Okay. So, if I issue some bond, that is a liability. Then you have again capital adequacy Basel norm. So that Basel norm which is in module B, that is again there over here. So that's why what did I say earlier? Module B is the basic. If you understand module B correctly, module C and D you can understand it very simply. Then asset classification and provisioning norm. So asset classification means all that standard asset, substandard asset, then what doubtful 1, doubtful 2, loss asset, right? All that asset classification and the provisioning for that. Provisioning, tell me who knows the provisioning? Does anyone know the provisioning for substandard loan? Provisioning for substandard loan, anyone knows? What is the provisioning for substandard loan? Type in the YT. Yeah, YouTube guys also you type in the comment section. It is 15-25, correct? 15 and 25. 15% for secured, 25% for unsecured. Okay. So similarly, this is substandard. Similarly, doubtful 1. Doubtful 1 is what? 2500. 25% for secured, 100% for unsecured. Doubtful 2 is 40-100. So 40 is for secured, unsecured is 100%. Loss is complete 100-100. Okay. These are the provisioning norms. Now, provisioning norms are not that simple. Yeah. Okay. Provisioning norms are not that simple. Remember. No, it is 2500. Mathili. It is 2500. Okay. Doubtful 1 is 2500, doubtful 2 is 4000, and then it is 100. Okay. So provisioning norms, remember, that's done. Next is liquidity management. Liquidity management means how to manage the liquidity. Liquidity means what? See here, this topic is again the repetition. Look at this. 29th chapter is a repetition from this, where was it? This 17th chapter. Liquidity risk. Some part, not completely. Some part is this repetition over here. Interest rate fund management. So interest rate fund means what? How to manage the interest rates of the bank. What is known as the NII. So this relates to NII. Last one is RAROC and profit planning. RAROC, what is the risk adjusted return on capital? Risk adjusted return on capital. What is the return on capital? Return on capital means, suppose, keep it very simple. See here, things are very simple. Suppose if I invest rupees, let's say 1 lakh in some project, okay? And if I'm getting, let's say, after 1 year on that 1 lakh, I'm earning, let's say, 1000 rupees. I'm investing 1 lakh and I'm getting 1000 rupees. So is it any worth? 1 lakh investment getting 1000. So what is the return? 1%. So that is ROC. ROC means what? Whatever I have invested, whatever I am getting returns, that is ROC, return on capital. So what is RAROC? Risk adjusted. Risk adjusted means what? Whenever I invest at 1 lakh in some project, that project might fail also. So if that project fails, then that is the risk. So that risk is to be adjusted. So that's why it's called as risk adjusted return on capital. Okay. So it's very important topic over here. Now, these are the 4 modules which you'll be having. In these 4 modules, you'll be having the numericals also. Numericals are not that simple, I'll call it. Module B numericals and module A numericals are tougher ones. So you'll have to follow. Okay. Those who are already in the earlier batch, means I am taking other batch also. Those who are already there we are studying this module B right now. So you might be seeing how tough it is in module B. Okay. So remember, these are all the 4 modules of this. Now I'll just give you the sample of how the questions come in your CAIIB in BFM. Then you'll understand what is the level of this CAIIB BFM, BFM specifically. A bank holds a stock of company A and wants to protect the downside risk on it. So it may do what? It may take a long position on the stock futures. It may take a short position on the stock futures. It may purchase a call option on the stock, buy a put option. So this is one question, simple one, simplest question available. Okay. So who can give me the answer? A bank holds a stock on company A and wants to protect the downside risk. So what should it do? It should take a long position in the stock futures, short position in the stock futures, purchase a call option or purchase a put option. What do you say? A, B, C or D? How many of you can answer this? Although, see here, it's not expected from you to answer this right now. Okay, because I'll be teaching you whenever we come to this topic. But if anyone is investing in stock markets, how many of you are invested in stock markets? Those who have not invested in stock markets, kindly note, kindly at least open a Demat account and buy 1 or 2 shares. And try to trade in those. Invest lesser amount, 1000 only. So what happens? You'll come to know how the market works, because BFM is totally related to markets. Correct, Maithili? The answer is B and D, both. See, there are 2 answers to this. That's why I've given 2 options. See this. It's not single answer over here. B and D, both of the options. I can buy a short position in the stock futures, or I can buy a put option also. So here comes, why have I asked this question over here? The question asked over here is because there are 2 parts to this now. One is stock futures and second is stock options. Both are moving towards the same direction. Futures and options, both are in the same direction. But There's a different investment. In stock futures, I have the higher investment than the options. Okay? But in options, there is again a problem. What is option? Option is like that insurance. Insurance which we buy. That is a sort of option. Okay? So option is like that insurance. And what is future? Stock future. This is similar to that of the what you buy that flat. Okay? How do you buy that flat? Whenever those who are on YouTube also, kindly watch this. What is future actually? What is a stock future? What is a future? What is a forward? It's simple. Buying the flat. How do you buy the flat? New flat. Whenever you buy the new flat, do you give the full amount right now only? No. What do? You give some token amount, and then afterwards on completion of that flat, you give the remaining amount, right? So that is future. What are you doing by giving that token amount? By token amount, it means you are telling that guy that, see, I booked this flat at this rate. So same is the case with futures also. In future also, forward also, we do the same thing. We book that by giving the token amount, and later we pay the full amount. Okay? So the answer for this is both B and D. The main purpose of capital adequacy norms is to ensure that the bank is having sufficient capital to provide loans, repay its depositors, provide a stable resource to absorb any losses arising from the risk in its business, and have adequate infrastructure on its own. So what is the main purpose of capital adequacy? Capital adequacy means the capital of my bank. Credit risk, market risk, operations risk. All the three risks come to me. And because of that, I need to have some sufficient capital. So that sufficient capital, how do I know? How do I know this sufficient capital? Okay. So what is this for? This is for providing the loans, repay the depositors. But the correct answer is this, C. Provide a stable resource to absorb any losses arising from its risk, from the risk in its business. So why is capital for? Capital is always for absorbing the losses. Now remember, there are two types of capitals. In fact, three types of capitals. Tier 1, Tier 2 and Tier 3. Okay? T1, T2 and T3. T1, T2 and T3. Okay? Now the details I won't give it right now because it's a huge topic. This is known as a free capital. Free. This is a paid capital. Paid. And this is the emergency capital. Emergency. Okay? So these are the three types of capitals. Why are these capitals there? The three capitals are there to absorb the losses. If my bank faces any loss, then how do I absorb it? Absorb it means what? My bank shouldn't go bankrupt. My bank should work. But I must be able to cope up with that loss also. And take the last question over here. A bank, now this is a difficult one. This is really a difficult one. This is technical question. But I've taken it because I want to show you what the level of questions are in BFM and how does the treasury work. This is a part of treasury. A bank borrows US dollar for 3 months at 2.5% and swaps the same in the INR for 3 months for the deployment of CPs at 5.5. CP means commercial paper. The 3 months premium in USD is 0.75%. The margin generated by bank in the transaction is, now look at this, 1 mark question. 1 mark question. You'll feel, what is this 1 mark? Such a difficult part, but it's not difficult. Once you understand this, once you go through the flow, once I start you teaching, you'll find this very easy. The logic is very simple. See this. What is this? Here, there are two parts in this. What is the bank doing? Borrow over here. Buy. Okay, borrow. Okay, borrowing over here. And what is it doing over here? It's spending, or what is it? Deploying, paying over here. So it is borrowing at what? Dollars. It is borrowing in dollars. See this, US dollar. What is the rate? 2.5%. So 2.5 it is buying. And it is paying in what? It's paying in INR, rupees. Okay, rupees. What is the rate? 5.5. Okay, so it is net gaining. But there is some premium given. 3 months premium is 0.75. So 3 months premium, whenever I have the premium, it means I'll have to take that premium into account. So I'll add this. So it is 0.75 over here. Add. So my total cost is what? 2.5 plus the 0.75, 3.25. So this is my total cost of funds and this is my total return. So what is my net margin? Net margin generated is 5.5 minus 0.5 minus 3.25. Okay, so it will be what? 2.5, 2.75? 2.75%. That is the net margin. 1 mark question. 1 mark question, isn't it? So this 1 mark question, if you don't know the basics, it seems to be difficult. But in how much time have we solved it? Hardly 10 seconds. 2.5. This I have explained. That's why it took 10 seconds. Otherwise, what is there? 2.5 plus 0.75 minus 5.5. That's it. That's the answer. Okay. So that's the way we'll be dealing with it, and we'll be dealing with the new with the topics from tomorrow. Okay. So this was just a orientation batch so that I can explain you what the level of BFM is and what are the level of problems. Okay. Bye from my side. We'll meet tomorrow again. And those who have not joined on YouTube, kindly join again. I'll tell you how to join this. See this. Go to Adda 24/7. Those who are watching on YouTube, remember, go to Adda 24/7. Hold on, let me show you. If you're having the app, I'll always suggest you to go through the app. Okay, in the app you get 1% extra using the coin system. Remember this. So go to Adda 24/7. One sec. Yeah. See this. Here you are on Adda 24/7. Go to Adda 24/7. Here, go to JIB and CIB. See this. Here you click on this CIB June 24. CIB. Okay. Clicked. Now you'll see the batches. See this. All the batches. Shapat, Nishchas. Click on view all. View all. You'll see the batches over here. Click on this. Resolution batch. See this. BFM batch singly. Plus combined batch. Resolution batch 2024. Click on this batch. It includes all the 4 subjects, compulsory ones. You get ebooks, you get test series, then you get interactive classes, recorded videos, limited size batches, everything you get it. Click on buy now. Put the code now. The code which I'm telling you, put that only. Y432. Y432. Click on this code. Y432. Click on apply. Now look at this. What are you getting? 79% off. 79. And if you're going through the app, you'll get coin systems. You'll get 1% extra. So you'll get around 80%. And what do you get in this 80%? You're getting all these things. Ebooks, test series, interactive classes, recorded videos. So join this batch immediately. Okay. From tomorrow we are starting the topic actually. So join it immediately. You can join the Mahapack also. In Mahapack you're getting multiple batches. Multiple batches for the same subject. And again, use the code Y432 over there for the highest discounts. Okay. Chalo, bye everyone. Okay, bye.